Hey and welcome back to another video on the DeFi Whale channel, and in this video we're going to be taking a look at Reactor. And we all know that crypto is booming, but the game has evolved. Just look at the markets, altcoins are flying, tokenized assets are on the rise, and DeFi volumes are breaking records. But here's the real alpha, DEXs are on fire. So let's just compare volumes. Decentralized platforms now handle up to 83% of Binance's volume, and we can see the volume of Binance, which is 127,000 BTC, so that's huge, and that translates to about 14 billion spot volume in the last 24 hours. When we head over to DeFi Llama, we can see that the DEX volume is 9.164 billion, so it's pretty close to Binance's volume. So that goes to show how much market there really is for DEXs. However, there's a catch. The DeFi world is fragmented, different networks, different fees, different risks, and it's only getting more complex. So when most people think of DeFi, they imagine simplicity, permissionless access, low fees, and full control. But in reality, using DeFi effectively today means juggling a chaotic stack of tools and protocols. You're going to need one platform for swaps, another for perpetuals, and separate ones for tokenized assets, and then a dozen different chains, each with their own bridges, gas models, and risks. Even something as simple as moving your tokens between networks becomes a process. You have to check exchange rates across multiple bridges, compare gas fees, review audits to make sure the bridge is secure, and if you want to be truly cautious, you also need to research the protocol's reputation, investigate the team behind it, and more. And that's just for major tokens. When you're dealing with smaller altcoins, it gets worse. You might spend hours just trying to find a reliable, obscure bridge to move your funds. And now let's add in actual trading, for example something basic like going long on ETH with leverage. To do that efficiently, you'd likely be comparing prices, liquidity, security audits, rewards and potential airdrop, and funding rates across multiple platforms such as Lighter, GMX, Hyperliquid, DYDX, and more. And let's say you're interested in newer markets, tokenized stocks, meme coins, NFTs, alt layer 1 launches, you're suddenly juggling dozens of dashboards, wallets, and tabs. The user experience becomes disjointed, the fees stack up, and the learning curve pushes out everyone except full-time DJs. And this fragmentation doesn't just waste your time, it leads to missed opportunities. You might miss better funding, trade into poor liquidity, or settle for a worse price simply because you weren't on the right platform at the right moment. And with new chains, assets, and products launching every week, this complexity is only getting worse. So how do you fix it? What newcomer or pro DJ should do? And it's pretty simple, don't try to manage it all yourself. DeFi is evolving too fast and the tools are too scattered. Trying to manually track prices, fees, funding rates, and liquidity across multiple platforms will cost you time and profits. Instead, use an aggregator. Let smart infrastructure do the heavy lifting, scan the market, compare options in real time, and execute the best trade all in one place. So let's dive into what an aggregator dApp is real quick. An aggregator dApp is a tool that connects to multiple DeFi platforms and protocols, like DEXs, perps markets, or bridges, and automatically finds the best option for your trade and yield. It saves you time, reduces fees, and improves execution by routing your transaction through the most efficient path across the entire DeFi ecosystem. And the easiest way to do it is to use an aggregator like Reactor, a powerful dApp that connects you to the best prices, liquidity, and funding across all major DeFi platforms. It's like having a professional trading desk in one interface, but fully on-chain and built for speed. I'm sure some of my viewers already use DeFi and apps like 1inch or Hyperliquid, but for those who aren't familiar, here's a quick breakdown. In DeFi, there are many decentralized exchanges like Uniswap, PumpFund, PancakeSwap, Radium, and others. Just like on centralized exchanges, the price of the same asset can vary across DEXs. For example, 1 ETH might cost 3,840 on Uniswap and 3,870 on PancakeSwap. It's a small difference, but it's still profit left on the table. To solve this, 1inch was created. It scans all the DEXs and gives users the best possible rates. And that's why 1inch exists. It scans all the DEXs and routes your trades through the best paths, helping you save on price and gas. But 1inch does have its limitations. It doesn't aggregate other aggregators like Audit or Parasol, so by using 1inch you might not actually get the best deal available on the market or make cross-chain swaps in every direction. On the other hand, Hyperliquid is a platform for trading futures, similar to Binance futures, but fully decentralized and with lower fees. That means it never asks you for your KYC, never freezes your funds, and has no limits on your activity and no centralized risks. That's exactly why more and more users are switching from centralized exchanges to decentralized ones, which now match Binance, Bybit, KuCoin, and others in speed and performance. So you might be asking, why am I telling you all of this? Well, because Reactor combines the power of 1inch and Hyperliquid and does even more from both sides. And In the meantime, they've also got an X, so I do recommend you to follow them on X. And we can see they give a lot of updates, so that's always a good sign for the project. So let's give them a follow. And the fuse is lit, DEX, perps and cross-chain swaps, they all have it. You name it, React's bringing the full arsenal to melt the old crypto meta. This is the blast before the boom, and we can see it here. So definitely make sure to check this out too. For more information about Reactor, and this is what only Reactor can give you. There's 24/7 tokenized stock trading on chain, so want to buy Tesla or Nvidia at 11 PM on a Saturday? You can. Reactor gives you round-the-clock access to tokenized stocks, fully on-chain and cash settled with no broker, no KYC, no middleman. And here's where it gets even more powerful. In countries where access to financial markets is limited like India, where over 200 million people are unbanked, Reactor becomes a gateway. All they need is a phone, a Reactor app and a bit of ETH. That's it. Wall Street level investing unlocked for the world. And there's leverage on meme coins, yes, even Pump Fund. So found a hot token on Pump Fund that's already up 2x. Imagine multiplying that trade with 10x leverage, now it's a 20x profit. And that's not theoretical, Pump Fund tokens often do 5, 10 and even 50x's in a matter of hours. So for example, let's take a look at Need. Imagine you would have bought in early, or you would have bought in yesterday, where it's risen over 30%. So say you had invested $100 and it went up 30%, you'd be up $30. But what if you 20x that? You'd be up 600 instead. So that goes to show the power of leverage. And that's why Reactor lets you act on that momentum, fast with access to leverage and proper risk tools all in one place. But the great thing is you can also earn like a broker, liquidity that pays you. You don't even have to trade to earn. Reactor allows you to provide liquidity directly to specific markets like tokenized Tesla or meme coin perps, and earn passive yield for traders' activities. Even better, you can choose where your liquidity goes, controlling your exposure, asset type and risk profile. In traditional finance, this is how brokers and market makers make money. Now you can do the same, but without a brokerage license or KYC. For example, if you supply liquidity to Nvidia traders, your profits will come in USDC and Nvidia tokenized stocks. That's something only DeFi can offer, and Reactor makes it available to everyone. Then let's put it simply, Reactor is your DeFi command center. Imagine having the entire DeFi stack, spot trading, perps, tokenized stocks, pump fund tokens with leverage, NFTs, DeFi use and real-time funding rate analysis all in one place. Instead of juggling 10 dashboards, bridges and wallets, Reactor brings it all together into one fast, unified and easy to use platform. You no longer have to search for better liquidity, faster execution or lower fees. Reactor does that for you automatically. It routes your trades through the most efficient path across all major DEXs and perpetual platforms in milliseconds. The platform officially launches in October, and you can be among the first to use it. Reactor is community focused, so early users have a real chance to qualify for the airdrop or find strategies that are gonna make you rich. Join the waitlist now to secure early access and don't miss your shot. And for premium trading features, you can link your Telegram and your wallet to their platform, so you'll be able to trade on their platform, of course. So why I'm in and why you might want to take a look. I've already jumped into the pre-sale and grabbed my share of React at just 0.03 USD. And here's exactly why I think this is one of the best early stage opportunities in the market right now. Well, first of all, there's an early entry at 70% discount. Reactor is currently in pre-sale at 0.03 USD. That's a massive 70% discount to the expected listing price. The product is nearly ready, the market is heating up, and the timing couldn't be better. And they have a community first sale model. Here's what makes this sale unique. For every token you buy, one team token gets burned. That's right, your allocation directly reduces the team's allocation. You buy 1,000 React, 1,000 team tokens are gone forever, to the point that the team will not receive anything. It's not just deflationary, it's a powerful ownership shift to the community. This model lays the foundation for a true DAO, one that doesn't simply follow team directives, but can independently share the direction, features, and priorities of the platform. Reactor isn't just building a product, it's building a community protocol from the ground up. Of course, there's also team vesting, which means no early dumps. The core team is on a strict 3-year vesting schedule, which means no fast exits, no sell pressure at launch, and full alignment with long-term project growth. Tokenomics are built to reward the community, 25% for public sale and 20% for liquidity. The rest will go to rewards for the community and the team if all tokens are not bought out. And the last thing because of which React will make 5 to 10x, they have a buyback model inspired by Hyperliquid. Reactor has a sustainable revenue model and plans to buy back React from the market, just like Hyperliquid, which launched at $3.50 and now trades over $40. which is over 10x. Buybacks is scarcity, and scarcity is potential upside. And now let's see the platform token page together. So let's take a look, and we can see Reactor, all the tools you need fully under your control, built for people who like to win on the move, earn and trade. And this is a screenshot of their UI, and I've got to say it looks really clean. And they have a lot of good coverage like Street Insider, Digital Journal, Tech Billion, Crypto Daily and CoinMarketCap. And you can access all the best crypto opportunities in one place: tokenized stocks, perpetual trading and DeFi. With that being said, DEX 3.0 is here. Trade any token, real world asset, iStock, leverage. They don't take a cent in fees. Fully on chain, owned by you. They've got dynamic liquidity pools, passive yield protocols, and it's owned by traders. We can see it's built on Hyperliquid, Injective, AgLayer, Forknet, Polygon and Katana. So let's make it simpler. They bring you the best crypto tech wrapped in a mobile user-friendly package powered by React. And with that, you can win anywhere. Also, they're going to get Reactor Pay, so you can buy yourself a coffee with Apple Pay with either stocks or crypto. They have over 30 plus chains integrated. There's 8 billion daily global trading volume on all DEXs, and 25 plus protocol and staking platforms. And we can also find their roadmap, but for that I do recommend you to pause the video. So the process of trading on Reactor is going to be seamless, but the platform itself is packed with powerful features. Let's explore why it's a game changer. First of all, Reactor is extremely useful, powerful, and you should definitely try it, trade on it, and keep an eye on it, because it's already launching in October. And you can join the waitlist now, be the first to access the future of DeFi trading. They've got all-in-one spot trading. Reactor is delivering ahead of schedule. There's 24/7 tokenized stock trading, leverage on high volatility tokens, smart aggregation and execution. You can earn like a broker by providing liquidity, and it's built for global access. No matter where you are, all you need is a smartphone and a bit of V. Reactor makes a powerful financial tool accessible worldwide, and it's perfect for alt season. When the market moves fast, you need tools that keep up. Reactor gives you the edge with speed, leverage, and unified data, right when you need it most. And now let's focus on the React token. It's the core utility token driving all activity within the Reactor trade ecosystem. It enables smooth, secure value exchange between traders, liquidity providers, strategy developers, and platform participants, powering every interaction across the Reactor protocol. Again, we can see the token distribution here, and for every token sold, one token is burned. And it powers core features such as governance participation. React holders can vote on protocol level decisions, from featured priorities and market listings to broader ecosystem upgrades. The more you hold or stake, the more voting power you get. There's also loyalty and incentive layer. Stake your React and qualify for exclusive benefits such as trading fee discounts, multiplied rewards for providing liquidity, access to limited time seasonal or event-based promotions, and there's membership tiers as well. Your React holdings determine your user tier: silver, gold, platinum, unlocking progressively higher levels on access tools and perks on the platform. And of course, tiered access to premium features. Certain powerful tools and services are only available to React token holders, including early access to trading markets, advanced trading bots and algorithmic strategies, exclusive analytics modules, and participation in alpha and beta testing. As for their ecosystem expansion, React fuels Reactors' ecosystem growth by driving liquidity incentives, partnerships, and integrations across DeFi, tokenized assets, and perpetual platforms. And of course, the deflationary tokenomics. Each month, a portion of Reactors' platform revenue is used to buy back and burn React, reducing supply and increasing scarcity. In bull markets or out seasons, this creates exponential demand pressure. And a good example would be Hyperliquid, as we can see on their chart. So why is Reactor not just a typical ICO? Most ICOs raise capital with hype, no product, and tokenomics that collapse under insider selling, and Reactor flips that model upside down. There's real products, real fees, and real buybacks. There's a live revenue stream before TGE. Reactor Trade already routes volume, spot, perps, and real-world assets across Solana and 20 layer 2s. And the main trade terminal will be launched in October. 20% of protocol fees also convert to React buybacks enforced by a smart contract, and these bought back tokens are burned weekly, creating natural deflation. For ecosystem growth, which is 40% of the allocation, ensures sustainable expansion of features, partnerships, and incentives to fuel even more revenue. Also, there's zero VC overhang, so no insider dumps. There's 100% public allocation, no private rounds, no seat discounts. And of course, there's utility that sticks, not just hopes and prayers. They've also got a dynamic floor treasury, a safety net, not a promise. 10% of every buyback is routed to a floor treasury in React and USDC. Treasury deploys LP positions only above the 90D VWAP. If price nukes, Treasury LP unwinds and buys back cheaper. It's not a hard price peg, but it disciplines the downside. And there's aggressive liquidity bootstrapping, calm release. Multi-chain liquidity seeded, on day one with protocol-owned assets, no mercenary LP farming, deep books for entry, then float to amplify buybacks. And marketing and user growth budget drives adoption and brings traders into these pools, creating a stronger flywheel. So by now you must get why I'm holding React. Reactor isn't just a powerful platform, it's a whole new layer of on-chain finance, and RCT is your key to everything. Also, I do know that the Reactor will get big. These are just one aspect to consider. Reactor isn't some side project, it's backed by heavyweights from the DeFi world with deep roots in trading tech, infrastructure, and cross-chain innovation. This isn't your average Web3 experiment, this is a serious execution play. Polygon, Katana, Aggregator, and this is just beginning. And the pre-sale is live, so buy now. Of course, I've also bought some, and I think you should too. So try to buy as much as you can, and it will work because of their Snatch loyalty program. So to end off the video, with its burning mechanics, real utility, and powerful ecosystem strategy, Reactor is the perfect platform to strengthen and diversify my crypto portfolio, especially in the heat of alt season. So right now, once again, the React pre-sale is offering the best possible entry price, just 3 cents. With limited supply, rising interest, and strong utility baked into the token model, this is a rare early stage opportunity. And for the early birds under you, you can use my referral link below to claim a 5% token bonus on your pre-sale purchase. But act fast, this won't last long. So join the React pre-sale through my link and secure your bonus plus the best price. And this price is only going to last for 50 more days, so definitely make sure to be quick. So trade smarter, earn faster, and get rewarded like the pros with React. Anyways, that was it for the video on React. As always, nothing in this video is financial advice, and you should always do your own research as well. Thanks for watching, and catch you in the next one.